Welcome back to Market on Close. Just a few minutes left in the trading day here. It's time now for the big picture. Let's welcome in the team from Charles Schwab, Joe Mazzola, head trading derivatives strategist at Charles Schwab Co. Thanks so much for joining us, Joe. What's your steer on these markets right now?
Yeah, it's interesting because even with markets down, the breadth is actually fairly strong. I think it's about 65–70% of the S&P 500 is actually advancing today. And I think what that goes to show is just like the narrow mega cap rally drove the market to where it's at in the last couple of weeks, you get a washout in those names and they can drive the market down. I mean, I realize Palantir is not one of the Mag 7, but I mean, it's been a retail favorite. It's been a leader. That's down 9% today. You got NVIDIA down 3.5%. So you're seeing some weakness in tech, but it's being absorbed by some of the other sectors out there.
Yeah, certainly a rotation day into value, as we've been discussing through the course of the program. Certainly seems to be a bit of a wait-and-see mode. Stocks in a bit of a holding pattern, no doubt, ahead of Jackson Hole. What are your expectations for that?
Wouldn't it be nice if we got some clarity in terms of how the Fed's interpreting the inflation and jobs data, and we knew what exactly was going to happen in September? No, we're not going to get that. But what we will get is we'll get some remarks, and I wouldn't be surprised if Powell did address some of the latest the PPI and CPI data, and maybe doesn't use the word tariff, but I think that's something that has to at least be hinted at in terms of if that's flowing through. We've said this all along, Sam, is that the data points we're getting in June, July, they're not going to be too reflective of maybe the tariffs making their way through the system, through the economy. That's going to take some time, and I think that Powell will probably make that statement, is that we're still kind of determining how much we're going to see in terms of pricing pressures. But remember, there's that dual mandate, right? And I think that right now we might start to see a little bit of a switch, maybe back towards the employment numbers. And if we get a non-farm payroll similar to what we saw last month, I think you'll probably start to see those probabilities ratchet back up toward the 25 basis point cut in September. They're already at 85%, but it was only a week ago that they were at basically 99%. So any weakness in the job data in the next couple of weeks, you probably see that number move up. And then maybe, just maybe a 50 basis point cut would be in play. But as of right now, that's off the table.
Yeah, I mean, it's certainly going to be a delicate balancing act as far as that messaging is concerned. I've seen a note out from Ben Emmons in recent days, who obviously is a good friend of our network, talking about, how he has to strike a balance between the opposing camps in the speech. It's not going to be a pain speech because the rates are restrictive, but, he'll likely emphasize inflation by acknowledging labor weakness, which we've seen coming through very much in those surveys. But the macro aside, let's talk about certainly some of the concentration risks that everybody's been talking about. As I mentioned, a bit of rotation that we've been seeing as far as how markets have been responding here. But I mean, what do you make of this? I mean, there's been a lot of talk about how, valuations are stretched. Perhaps some of the Mag 7 are feeling a bit exhausted right now as far as investors in some of these names, that, perhaps we are due for a bit of correction. Maybe this is the broadening out of the AI trade. What's your thoughts on this?
I think it's a healthy pullback. I think you have the Mag 7 outside of NVIDIA, who hasn't reported yet, basically had 26% year-over-year earnings growth. I think that, the AI trade, while it's stalling right now, it still probably has some longer term legs. And maybe, like you said, Sam, maybe it broadens out, so it's not just the picks and shovels, but now it layers into that next cycle of the AI trade, because I don't think that that's going away. But I do think that a pullback is healthy. I don't think that the bullish narrative is over by any means. It's just, we got a little bit ahead of our skis, and a pullback is due. Now, that being said, there are some levels that you might want to kind of keep an eye on. And the 20-day moving average in the S&P 500 has been support along the way. We sold off a little bit below that a little over a week ago, and then the next day we were right back above. So I would kind of keep an eye on that. And if you're looking at the single stocks, there's definitely some some pullback, not just in technology, but just maybe I would think of it this way: the higher beta names were the ones that kind of took it on the chin. So you could make the case that you saw it in some of the fintech names as well today. Maybe some of the other high flying brokerages where they have been moving quite precipitously. Those have pulled back a little bit as well today. So some of the names that have just really had the biggest moves in the last couple of weeks, those are the ones that are giving it up. But like I said, the breadth still remains healthy. When I look at the options market, I don't see an exceeding amount of downside protection being bought. Yeah, it's a little bit higher than what it was a couple of weeks ago, but there's seasonality there as well too. So I think all in all, it's a healthy pullback. We're not even at 1%, right? It just seems that way because the big names that we're so accustomed to going up every day are showing just a little bit of a pullback today.
Yeah, no doubt about it. I mean, beneath the surface, it tells a little bit of a different story to what we're seeing on the headline. Really great chat. Thanks so much for that, Joe Mazzola of Charles Schwab joining me there. Appreciate it.